Well, folks, I have something absolutely shocking to show you in this video here today, folks. There's something I just heard, and I was like, there's no way that's accurate. And then I fact-checked this thing, and I'm like, oh my gosh. And so if you're thinking about, are we close to a bottom in any of these stocks? How much farther do we have to fall? Is it another 3 months of pain, 6 months of pain, 12 months of pain, those sorts of things? I think this is going to be really, really helpful to everybody trying to figure this out. Like I said, when I heard this, I was like, is that accurate? I had to fact check it. And I was like, oh my gosh, that's 100% accurate. And this is something I was not even aware of. I was like a little history lesson. Okay, this is absolutely big. I got a lot to share with you guys in this video here today. Thank you for FTX US for sponsoring today's video. A little more on them a little later in the video. So it's funny, as soon as I turn on CNBC today, this is the headline I'm greeted with, literally. No longer makes sense to own equities. I spoke about, this sentiment in the market right now, and I spoke about this yesterday on how this is the sentiment of Wall Street. They want no part of stocks right now. They're selling, they're cashing, they're giving their money back to investors like Melvin Capital did, where they're just like, we don't know what to do with the money. Just, here, you guys just have the money back. This is the moment in time we're in this market right now, right? Where Wall Street is scared out of their minds. I've never seen Wall Street this scared. Bottom line, I can't, not even in March of 2020, I didn't see them this scared. Maybe when I was first getting in the market at the end of 2008, maybe they were this scared. In the double dip recession, I didn't see them this scared. In December of 2018, in that big bear market, I didn't see them this scared. For me, this is the most scared I've ever seen Wall Street. And like I said, the sentiment that guy has, it no longer makes sense to own equities. Basically, what he's saying is sell your equities. That's basically, you might as well say that. If it no longer makes sense to own them, then it's sell them, right? So he's basically saying sell your stocks because it doesn't make sense to own these stocks anymore. And that's where we're at in this market right now, right? Now, interesting stuff is happening beneath the surface that unless you're really, really up on the market, you don't even know what's going on. But let me show you this, okay? So for months and months and months, basically what has been going on is the Russell would drop more than the NASDAQ. Okay, the NASDAQ would drop more than the S&P 500, and then the S&P 500 would drop more than the Dow. And so the Dow would always do the least bad, okay? And today we have a perfect 100% flip, where the Dow did the worst, the S&P 500 did a little better than the Dow, the NASDAQ did a little better than that, and the Russell actually went green today. I can tell you, this is the second time I've seen this in the past few trading days now. And so, when you start seeing stuff like this, and the more you start seeing it day after day after day, the more you're in a flippening of the market. And there's things that are happening in the market that are quite interesting compared to what you're used to seeing, okay? And so this right here, like I said, unless you're really up on the market, you have no clue this is going on, but this is really good to kind of keep in mind those four indexes and how those perform, okay? Now, a heat map today shows us it's a very mixed day, let's call it that, but ultimately it's a red day because of this guy right here. Apple is such a huge weight, it's going to pull down the Dow. If Apple's down 2+%, it's going to pull down the Dow, it's going to pull down the NASDAQ, and it's going to pull down the S&P 500. That's just the way it is. When that baby's down, it's going to pull down everything. And so, yeah, that's what happened. And obviously, if you tack on top, Google down, that's how you get the markets down here today, okay? But yeah, when that big baby right there is bright red, there's just almost no hope for the indexes in that sort of situation, right? Now, as far as where we're at for the market right now, as of today's close, the NASDAQ is down 29.1%. Once again, bear market's usually considered when an index is down over 20%. So the NASDAQ's obviously immensely into bear market. We're way past bear market. That's, especially when you start talking about over 30%, that's when you really start talking about crash. 35%, 40%, that's when you talk about an index crashed, right? So we're somewhere in between a bear market and a crash in the NASDAQ now at this point in time, right? IWM stands at almost down 28%. S&P 500 is down about 19%. Once that hits 20%, then the market in general will be considered a bear market officially. But a lot of people look for the S&P 500 to hit that, okay? The Dow's down over 15%. And I'll be honest, the Dow and the S&P 500, they got some catching up to do. They got some catching up to do because this is so abnormal. Usually, the Dow and the S&P 500 are within 5 percentage points of the NASDAQ. And the fact that there's such a wide gap between these, I mean, we're talking about 14 percentage points between the NASDAQ and the Dow. We're talking about 11 percentage points between the NASDAQ and the S&P 500. It's not normal. It's not normal at all. It should be 3 to 5 percentage points. So these babies, unfortunately, have some catching up to do on the downside there. So either that has to happen, or the NASDAQ has to come back really strong and get more in line, because this is not right. That's not what happens, and every single time throughout history that corrects itself. Okay, I created this watch list probably in the past 24 hours or so called safety stocks, and the reason being is these are considered the safest of the safe companies by Wall Street. Like, if you ask them, what are the safest stocks? Like, this is a type of list they'll give you: Clorox, Target, Walmart, Apple, Procter & Gamble, General Mills, Coca-Cola, Smucker's Jam and Jelly, right? Costco, Pepsi, Kraft Heinz, Microsoft, Campbell's Soup, Kroger, and Dollar Tree. Okay, that's like the list of the safest stocks in the market they'll give you, okay? And these stocks got hammered yesterday. I mean, these stocks were down all like 6 to 12%. And here today, these stocks are getting absolutely obliterated again here today. The safety stocks, right? And so when I say we got catching up to do for the Dow and the S&P, this is exactly what I'm talking about. And this is exactly why these stocks are all dropping. And you're looking at it and it's like, holy smokes, man. Why are these stocks starting to trade like why is Clorox starting to trade like it's freaking Shopify stock over here, okay? This is what happens. You're at the final stage of the market crash. Now, when I say the final stage, it's very important for everybody to understand this. Very important, okay? When you're at the final stage, it can last several weeks. It can still last several months. But we are at the final stage now, because we already got the spec stocks and the meme stocks to drop first. That started around February of 2021, okay? From there, we got small caps to fall. From there, we got mid caps to fall. From there, we got big tech to fall. First, this more speculative big tech, then everything big tech now. And the last ones to fall are like energy, utilities, and these safety stocks, okay? And so that's why I created that list, so I can keep track of this now that we're in this kind of final stage of this, let's call it crash. And like I said, when you're in the final stage, like I said, it can last potentially several weeks. It can last potentially several months. But just like if you look at history, we are in that final stage right now. And this is the stage where, like I said, everything gets hit. The indexes get hit, the Dow, the S&P, everything that had held up just starts giving in, and it's like, holy smokes, man, there's nothing that's working in this market, right? Clorox, I had no clue about this, okay? This is insane. This is a 5-year chart of Clorox. Clorox is up 4% in the past 5 years. Think about that for a moment. 5 years, 4%, and think about how much they benefited from Rona. Is that not just insane to blow your mind there? Like, crazy to think about. This stock's only gained 4% in 5 years, when a once in 100-year health event happened that, Clorox obviously benefited from. And anybody that was selling anything that was a disinfecting type product benefited massively, right? Cathie Wood stock's on a tear today. TARC, which is that 2X ARC fund, is probably up somewhere around close to 10% today. So huge move there. Unity, massive move. Zoom, if you just get any sort of buying activity, those stocks are just ready to fly when it comes to Cathie Wood stocks, okay? Now, I got some insane stuff to share with you guys. It's going to absolutely blow your mind in just a moment here. But first, I got to shout out FTX US, the official crypto partner I personally use. FTX, they just got into stocks today as well, so it's absolutely amazing. And when it comes to FTX, you can set up your account to do recurring buys, essentially. So let's say you want to, buy $10 of Bitcoin each week, or Ethereum or something like that. You can set up your account to do recurring buys. It's pretty darn amazing. Like I said, they just got into stocks literally today. That announcement came out, so that's huge. No payment for order flow, so that's going to be massive for FTX. I'm really, really excited about what they're going to do in the stock space as well as the crypto space. And right now, if you use my link down there, that is the pinned comment, and use referral code HOLYSMOKERS, you can basically get a free crypto on every trade over $10, and also get up to $100 in free crypto when you deposit through the platform. Okay, so yeah, I definitely take advantage of that. Make sure you use my referral code down there, and that will be pinned comment. They also partner with folks like Tom Brady, Steph Curry, and I just saw they sponsored the Miami Heat arena too, which is pretty darn awesome. Okay, so yeah, we'll see what happens in the finals. Alrighty, guys, let's get more into this. Okay, SOFI stock. is up over 50% in the past few trading days. Now, I think I mentioned to you guys that I listened to that SOFI conference call. I walked back and forth in the backyard listening to that SOFI conference call last week. I was blown away. It was really impressive. I mean, everything from their numbers to the average credit score of somebody that's using their products, right, to the average income of folks that use their product. Like I was absolutely blown away by how good those numbers were, and the stock was very obviously disrespected. But you look at how much we haven't even had a big move in the matter of fact. The Nasdaq's probably down since this time, and here SoFi is up 51% in a matter of a few trading days. Imagine what would happen to SoFi stock if we just got some dang momentum in the market, right? This has gone up 51% in a few trading days with basically no momentum in the market. So, this is why I say when it comes to these stocks, I just have to continue to add shares of stocks I love. I'm not personally a shareholder of SoFi, by the way, but because when you see the market just starts to turn a little bit, the 20, 30, 40, 50, 60, 70% moves happen quickly. And that's out of every single crash, bear market, whatever you want to call it, every single time the stocks that got nailed the biggest came back the fastest. And we see that with the SoFi here today. Lumber. I don't know if you guys have been keeping track of lumber. This is a 3-month chart of lumber. Who would have thought it? Lumber's down over 40% in the past 3 months. All right, absolutely incredible. Now, this to me goes back to worries in housing, goes back to worries in the economy. When you see lumber just falling off a cliff like that, right? Now, the stock like Rocket benefited today on the back of this 5%. At the end of the day, just because lumber is going down, it doesn't mean magically like people are going to go buy houses, because at the end of the day, housing is driven by how much are the houses, how much are people making, and what are interest rates. And interest rates and basically how much people are making is not in the best place, especially when you consider inflation and how expensive homes are right now. So I wouldn't say that, okay? Now, I just saw this as I was, prepping this video. Ross stores down 15%, and this just is a continuation of the retail wreck, I call it, that's going on right now, where these retail stocks are just being absolutely devastated at the moment, right? And you look at Target. It went down again another 5% here today. This stock is down over 30% in just the past 5 days. Now, me in regards to Target, I'll say this: I'm not a shareholder of Target, but I gotta say, I like the stock. I actually like it. I actually think it's a pretty darn good value. Actually, a really darn good value. I love the way the company's been run. Of the sectors I know really well, or just kind of the spaces in the stock market, I know food and drink companies really well. I know needs-based companies really well, and I know retail really, really well. Like, those are my strengths, and I'm usually able to forecast the long-term trajectories of certain companies. And I gotta say, Target does a damn good job, and they've been the most impressive big box retailer by a mile. And I think they've done way better running their business than Walmart has over the past 5-10 years. So I've been nothing but super impressed by Target and everything they've done. And I gotta say, Target's actually buy. This is a stock that I probably would have been picking up today if it wasn't for the fact that there's a million other stocks that are so heavily discounted right now. But the issue with Target, I'll say though, okay, everybody talks about, is there a credibility issue with the Fed? Well, the issue with stocks right now is stocks have a credibility issue because Target missed EPS so bad. In Walmart, inventory climbed like over 30% because those companies had such bad numbers. They have credibility issues. No one really believes. So you can see that stock and it says 11 forward P, and you're like, oh my gosh, like, are you kidding me? Like, Target for an 11 forward P? Is this some kind of sick joke? Like, give me the shares. How many can I take? Okay. But right now the market looks at that and they're like, is it 11 forward P, or is it more like a 14? Or is it more like a 17? Or is it more like a 22 forward P, right? And so that's what the market's kind of looking at, right? It has trust issues right now. The market has big trust issues, and for good reason. Because when some of these companies miss EPS as bad as they've missed, when they miss margins as bad as they miss, it creates trust issues in the market. It creates credibility problems in the market. At the end of the day, Target's a buy. That's what I'll say about that. Target is a buy. Anything in the 150s or below that stock is a buy. And maybe eventually I pick up some shares. It's hard for me to buy Target when there's a lot of other stocks that are honestly much better deals than Target right now. And it doesn't mean Target's not a good deal, because it is. And Target at $150 is a really good deal. But there's stocks out there that just have way more reward potential than something like a Target, right? Now, this is insane, okay? So I had CMC on as like background noise, right? And this gentleman right here, he brought out some information that I was not aware of, okay? So basically everybody's trying to figure out recently, this market crash we're going through, is this like a 07, 09? Like we're going to have a great recession where everybody's going to be scared that we're going to lose the entire financial system, where real estate's going to crash 50%, okay? Or is this more of a tech bubble situation where, stocks, the whole indexes fall for several years, right? Or is it maybe a combo of both, right? So what this gentleman was bringing out as a point is we all look back at that time period and we look at the indexes, right? We don't look on an individual stock basis. And even myself, I've never looked at really an individual stock basis and say, where did this stock bottom back then? And if you look back at that crash, let's call it that, the tech bubble crash, what you're going to find is the indexes, S&P, NASDAQ, and whatnot, bottomed around mid to late 2002 into like early 2003 and started going up, all right? And so therefore, you're like, okay, the crash started in 2000. It was like a 2 to 3 year kind of just down cycle crash, right? And so it leads you to say, okay, well, if this is similar to that, then we've got still another, 12 to 18 months to go here of just down market. But what he brought out as a great point is he said, and I had to fact check this, he said, if you look at a lot of the companies back then, they all bottomed in 2001, way before the indexes bottomed. And they already had started doubling up, tripling up, quadrupling up in price before the indexes ever fell. And so I said to myself, okay, let me look at one of the stocks that was, a speculative stock back then. And let me see what that stock ended up doing. And this stock, peak to trough, fell over 90%. Okay? And some of you guys might know this company because you probably shop with this company every day of your dang life, okay? And it absolutely blew my mind, but this man's not telling lies. He's telling the truth. And I give him respect because there's not been a lot of people telling the truth in this market right now. Amazon bottomed in September 2001. By the time, and this stock was $5 a share at that time. By the time the market bottomed, which was like, late 02 into 03, Amazon was already $15, $20 a share. So think about that for a moment. And so basically the point he was making is if you love some of these growth companies that have fallen, 60, 70, 80, 90%, you have to pick up those stocks now. You can't kind of sit around waiting and say, well, we might be down for another 12 to 18 months. You've got to pick up those shares now. And I'll say that's a brave statement to make because everybody on Wall Street right now is acting so dang scared. They're afraid to put $1 in Apple stock, for Pete's sake, okay? They're panicked. And this is why I continue to just be a buyer this year, because I'm not betting that the market's going to be down again in 2023 and down again in 2024. I'm not willing to make that bet. The bet I'm willing to make is I see great deals on stocks I love that have, in my opinion, amazing long-term futures. I'm going to pick up those shares now, and I'll continue to pick up those shares in 2022 as long as this market's weak, because it's very possible that a lot of these stocks could go up 50%, 100%, 200%, 300% before the index has ever bottomed. We've seen this play out in history. We've seen this before. And look at a SOFI. A SOFI is a perfect example of that. A company that, the stock price has climbed 50% in a matter of a few trading days in a situation where, the market hasn't even done anything. Imagine if the market had done something positive over that same time period. Imagine what SOFI would have done, right? And so that's why you can't just sit on your hands, and that's why I can't do that. I gotta be out there and be a buyer and take advantage of good deals in the market. So that's my name of the game. Hope you guys enjoy this. As always, make sure you sign up for FTX US with the pinned comment down there. Use the referral code HolySmokers and get your free crypto. Much love as always, and have a great day.